The other energy metal that I want to talk about, and it's probably my favorite energy metal right now, is uranium. Now, we've talked about this at length. Uranium, we were supposed to see a renaissance. Prices were supposed to go up. What happened?
Well, that's a good question. I've talked in the past, and I think one of the last times we talked, I said uranium is a contrarian's dream, and I still believe that. I said that at $34 a pound, and here we are at $28 a pound. And nuclear power, for all of its problems, is crucial. For green baseload power going forward. So the story of reactors in China and places like that is still intact. Obviously, I think the current linchpin will be restarts in Japan. And I know we keep saying that, and we haven't seen it yet. I think eventually we will, because the economics dictate that it has to happen. But I'm still optimistic. I just think that it's going to be continued to be delayed for the foreseeable future.
And that was one of the things I heard here at the Canadian Investor Conference, was that China, India, all of these reactors are still very relevant, and it was suggested that this renaissance is actually happening. It's just not happening in our backyard.
Yeah, look, I've heard the argument that industrial minerals can explode in price up or down based on supply and demand dynamics, and I actually disagree with that. I mean, these are all metals and minerals that are bought and sold based on negotiated contracts. Very rarely is there a futures market where you can plan ahead. So with respect to uranium, I mean, you're going to see a slow upward price progression. It's not like we're going to be, talking next week and all of a sudden uranium's going to be at $40 a pound. It just doesn't work that way. So
one can dream.
Yeah, you can dream. Sure, you can dream about a lot. And so that's really the way that it works. I hate to say it, and you could say this about a number of the commodities, but patience is going to be rewarded, in particular with uranium, because a lot of the production, upwards of 60% of global production, is not profitable at current prices. So, you're still seeing this contraction. Companies like Paladin and Cameco are really, reining in their horns, so to speak.
Yeah.
And that it won't always be this way, and it won't continue. And that's why you want to be thinking hard now about who can operate profitably at current prices, or what sort of optionality you want from companies at higher prices.
And on that note of operating profitably, can anybody really operate profitably at $28 a pound?
Well, sure. I still remain focused on the in situ near-term production stories. UR Energy, Uriners, UEC down in Texas. A lot of the in situ production in Kazakhstan. I mean, that's the majority of where that takes place. The hard rock production stories, as we've seen from pronouncements like Paladin with shutdown of their mines or care and maintenance, it just doesn't work until you get $60 or $70 per pound uranium, and we are obviously a long way from that. So.
We're halfway there.
We're halfway there, but think about how long it took to come down from that level to where we are today, and it could take just as long to get back up there. So it's a good story, but it's a long-term story.